All right, joining me now for more on this, CBA Chief Economist Stephen Halmarick. Stephen, first and foremost, your prediction and why on what the RBA will do tomorrow.
Yes, good afternoon. So we've actually got the Reserve Bank on hold tomorrow, so leaving the cash rate at 4.1%. But I have to say it's a pretty finely balanced decision, as it was in June. You know, the minutes from the June meeting said the decision to raise rates is very finely balanced. So on balance, we're saying on hold tomorrow. But as you just heard from that story, we and many others are predicting a rate rise in August. So we're expecting an increase to 4.35% in the August board meeting, which would be after we get the full June quarter CPI number and when the Reserve Bank does its quarterly economic forecast update.
So I think the thing most mortgage holders want to know is whether it's July or August, how much confidence that that's it or just about it? Because yes, we had the much lower than expected unemployment numbers. So, you know, maybe migration is starting to tell a story there. But we finally saw inflation take a big hit in the last indicator we got. Would you have much confidence that this will be it for the RBA, whether it's July or August?
So our forecast is that the August rate hike is the last one in this cycle. So that gets us a peak of 4.35%. But as you imply from the question, it's really data dependent. So the RBA will certainly want to see, the modest downturn in inflation pressures that we've started seeing continue through the remainder of this year, and also some softening in things like consumer spending and indeed the labour market, which the Deputy Governor of the RBA has been talking about. So it's really up to the data, and but at this stage, our forecast is 4.35% to the peak in August.
Okay, and so look, as you say, perhaps data dependent. Is there a thought that the RBA will consider in particular that these rate hikes take time to filter through? Yep. It can be a matter of months. And also all the international signs that previously when people were saying, hey, how worried are you by inflation? The RBA was saying, look, we don't get as affected by international factors as much as people think. Clearly that was the case. We were affected. Do you think that has filtered through when you're reading the minutes of the RBA that there will be a bit more caution around just pedal to the metal?
Well, the lags in monetary policy is something we've been talking about for quite some time. So if you have a mortgage, variable rate mortgage, from the day the Reserve Bank puts interest rates up to the day you're actually paying that higher interest rate on your mortgage is 3 months. You pay your mortgage monthly in arrears in many institutions, including the Commonwealth Bank, and so there's quite a lag involved. So if the June rate hike won't be paid by people in their mortgage until September, and if there's a rate hike this week, then it's October, or August, it's November. So there's a lot of lags involved here for people with variable mortgage rates, and then we've got the large fixed rate rollover happening over the coming months and into early next year. So there's a lot of monetary policy tightening yet to flow through the system. And so that's why we think the RBA can peak at 4.35%, lower than others are forecasting and lower than some of the other major central banks around the world that are at very high fours, if not in the fives.
I guess that's the interesting element of when people are saying, oh, well, look, the RBA has got to be really cautious, don't go too hard. There's still that big cohort coming off fixed rates. So if it comes to next year, the RBA thinks the economy might be in a bit of trouble, that can have a pretty quick effect because people that were waiting to come onto this really big rate, suddenly you bump, half a percentage off that, 50 basis points, and then you just sort of temper the effect there.
Yeah, so our forecasts incorporate monetary policy easing getting underway pretty early in 2024, really for that reason. So, a big lag effect of this tightening coming through. We think that we'll see a slowdown in consumer spending. We'll see inflation trending back to the target range through 2024. So not back into the target range until the end of the year, but heading that way. And so we've got rate cuts beginning to start relatively early next year as the RBA tries to calibrate. And, there's narrow path that they've been talking about getting inflation back to target range, but with keeping the economy growing and not seeing too much of the big gains in the labour market we've experienced, reversed.
All right, the prediction's in. We'll see how it goes. Stephen Halmarick, thanks for your time.
My pleasure. Thank you.